David, just what can come out of the numbers later on this afternoon that isn't already in the price?
Well, thanks for having me on. We're looking for net sub ads of 6.11 million, with the breakdown being 1.22 million net U.S. ads, 5.05 million net international ads, and then remember the loss of call it 160,000 DVD-only members. The stock continues to work because the shows are good. 13 Reasons Why, Dear White People, Jessica Jones, Unbreakable Kimmy Schmidt, just great shows that are catalyzing subscribers higher every single quarter.
David, the shows are great, but the stock's up 100%, so I imagine it's not a secret. So which goes back to the previous question. What is not in this price? Because these expectations have been out there for a while, haven't they?
What's not in the stock price is the operating leverage. If our numbers are correct, then this year, fast forward 6 months, Netflix should show, let's call it 133% operating income growth, 120% EBITDA growth. That's just definitely not in the stock. It's starting to be, with the stock up 100% for the year. Was up 57% last year. We're making progress, obviously, but 503 represents that operating income growth and hence operating leverage.
David, you've certainly been right to be bullish through the year so far, so it's hardly decent of me to argue against the bullish view on a stock that has done this well. But I will use some of the research from Buckingham this morning, who downgraded the stock and noted what was happening on the international side of things. The competition getting more intense, the pricing power becoming slightly more limited. What do you make of that argument, David?
I mean, that's the argument that many of the bears and many of the shorts have been using for years. It's the same argument that we heard throughout February and March when the stock was trading at around 320, corrected down to maybe 275, 280 or so on, concerns of, quote, competition, unquote. It's not really real competition, right? I mean, if someone moves to Amazon Prime or if someone moves to HBO Now, there's no law that says you can't get both. It's not really linear competition. You can get both, and we're starting to see that in the subscriber numbers.
Hey, David, just as a final question, I don't recall many CEOs last year complaining about a weaker dollar. In fact, I don't remember them saying that it was good for their underlying earnings. Typically, what I do find is that when the dollar moves against them, I start to hear a whole lot more about it. Do you expect to hear the dollar story play into these numbers from Netflix later?
Not really. They've taken some non-cash impairments on their Euro bonds last quarter and the quarter before that. I think we saw that maybe 5 quarters ago as well when there was a dollar surge. Expect sort of a mild impairment there on the GAAP numbers, certainly this afternoon, but it shouldn't affect the stock price.